right, today we're jumping into the wild world of biotech stocks to look at a company called BioAffinity Technologies. Now, this is a fascinating story. On one hand, they have what could be a game-changing technology for detecting cancer. But on the other, it's a penny stock, and it's caught up in a serious whirlwind on the market. And when I say whirlwind, I am not kidding. Just look at this. On a single day, March 13th, 2026, the company's stock, ticker BIAF, shot up nearly 100%. A jump like that, well, it's going to turn some heads for sure. And it brings up a huge question. You've got to ask yourself, what is going on here? Is this explosive pop backed by a real life-saving medical breakthrough? Or is this just speculative hype, the kind of thing that can fizzle up and burn investors just as fast as it takes off? That's what we're going to break down today. We're going to look at both sides of the coin, the incredible promise and the pretty harsh reality. So first up, let's look at the bull case, the optimistic side. And it's all about the company's pretty amazing technology. And the problem they're trying to solve? Well, it's one of the deadliest out there. Let's be real. Lung cancer is an absolute monster. It's incredibly difficult to treat, especially when it's found late. I mean, look at those survival rates. They're just grim. But here's the thing. The real story is the unbelievable power of catching it early. If you find lung cancer in its early stages, you can completely flip the script. The survival rate can jump from single digits all the way to over 90%. And that huge gap, that's exactly where BioAffinity is aiming. So what's their big idea? It's a test called CyPath Lung. The key word here is non-invasive. That means no painful biopsies, no cutting. A patient just provides a sputum sample, which is basically just mucus coughed up from the lungs. The test then uses some really advanced tech, including a machine learning algorithm to scan millions of cells and look for the early warning signs of cancer. Okay, so does it actually work? Well, according to the clinical trial data, the results are pretty darn good. It's got a 92% sensitivity rate. In simple terms, that means if you have lung cancer, the test will spot it 92% of the time. And the 87% specificity, that means if you don't have it, the test will correctly give you the all clear 87% of the time. For a test this simple, those are really, really powerful numbers. And it's not just a lab experiment. The market is starting to catch on. In 2025, sales revenue for the CyPath lung test grew by a massive 87% from the year before. That's a huge jump. It tells us that doctors are actually starting to use this thing, and it's getting some real traction out there in the world. Now this is a huge deal in the medical device world. Getting CMS to agree to reimburse for your test is like getting the golden ticket. It's a massive stamp of approval. It opens the door to the enormous market of Medicare patients, and just as importantly, it makes it way easier for doctors everywhere to feel confident ordering the test. This was a major, major win for the company. But, and there's always a but, isn't there? This is where the story gets a lot more complicated. Because for all that amazing science, BioAffinity is still a very young company, and it's facing some serious financial problems. Which, of course, brings us to the bear case. It's really the classic biotech puzzle, isn't it? You've got what looks like a life-saving product, you've got sales that are growing fast, and you've got big regulatory wins. So, why has the stock been such a roller coaster and mostly down over the long haul? Well, as it so often does, the answer is in the money. Or the lack of it. And here's the number that keeps investors up at night. In fiscal year 2025, BioAffinity posted a net loss of almost $15 million. Look, creating and selling new medical technology is just incredibly expensive. And right now, the company is spending way, way more than it's making. And if you dig a little deeper, a few red flags pop up. The company itself admits it's quickly burning through cash. That $15 million loss, it actually got a lot bigger compared to the year before. All this means they're going to have to raise a lot more money and soon. And for investors, that usually means stock dilution. They create new shares, which makes each existing share worth a little bit less. It puts constant downward pressure on the stock price. And well, this chart really says it all, doesn't it? Since the company went public at over $6 a share, the stock has tanked, losing about 75% of its value. Suddenly, that huge one-day spike we saw earlier looks a little different when you see the bigger picture, right? So you've got this wild tug of war. On one side, you have incredible breakthrough science. On the other, you have a really shaky financial situation. So what does the future possibly hold? The next huge mountain they have to climb is full FDA approval. Right now, CyPath Lung is on the market, but getting that final FDA stamp of approval as a medical device would be a total game changer. The company just started a massive trial to get there. But just look at this timeline. It's a long and very expensive road. We're talking 3 years, thousands of patients, and there's absolutely no guarantee of success at the end. And this slide really nails the whole dilemma. You've got the market saying the stock is worth about $2 a share. But then you have at least one analyst firm, Argus Research, looking at the same company and saying, nope, we think it's actually worth $8. That is a massive difference, and it just shows you how wildly different the perception of this company is versus its potential. So, what does all this mean for an investor? Well, it puts you right in the middle of a classic high-risk, high-reward scenario. It's a real dilemma. I think this quote from that Argus report just hits the nail on the head. It perfectly captures the bull argument. What they're saying is basically, hey everyone, you're all so worried about the cash burn and the financials that you're completely missing the incredible value of the technology itself. They're arguing that the market has gotten it wrong. And so that leaves us right here with the million-dollar question. Is BioAffinity Technologies a truly groundbreaking medical company that's just a few years away from changing everything about how we detect lung cancer? Or is it a cautionary tale about a company with a brilliant idea that just might burn through all its cash before it ever gets the chance to truly shine? That's the gamble, and only time will tell.